Welcome to another video on trend lines. This is First Lady Harmonic. I did one nice short video on trend lines and channels because I like to keep it simple, but I wanted to talk about something called the institutional levels. Institutional levels are the levels in which the major institutions such as the banks, the central banks, the hedge funds, things like that, those big players which makes the moves in the market. They are the ones who actually push these moves in the markets. I hope you can see my my mouse here, my crosshair. So this large move here is not made by us, which is we're called retail traders. They're made by the institutions. This one move right here, they came into the market and pushed the market up. There's the one who pushed the market down, and so forth. The institutional levels, when drawing their horizontal trend lines or horizontal support and resistance, they are made at where price closes and opens. So they are not made at the wicks. The wicks are what I call levels or rejection. They are areas of where price has tried to go but has been rejected. So now I'm looking at a weekly chart, and you can draw your trend lines and use different colors based off of the time frame in which you are currently on. I tend to use, let's say like an orange for my weekly markup. So that way I know whenever I get to this particular color here, I'm at a weekly level. Just get rid of this here. Okay. So let's start from the lowest low, which is right here. Here is my weekly level of support. It's not at the wick, it's at where price ended. And I always said, as I said before, in reference, and I think my trend line video, that there are many different brokers out there. Sometimes the charts look a little different. Wicks a little longer, shorter, maybe a candle is different or two, but what is always the same is where price closes at. And so that's why some people use price instead of the wicks when drawing their trend lines. Okay, so now this is a point of reaction. At this level, the institution came in and they reacted at this level and they drove the price completely up, right? So now we have a high point as well, a weekly high. So you have your level of support and you have your level of resistance on a weekly time frame. I'm using TradingView. I use TradingView to mark up my charts. Sometimes I use MT4 depending on the method in which I'm working with at the moment. But I usually use TradingView because it's a much cleaner chart for me to see. Okay. So now getting back to this, you have your levels of support and resistance, and there's usually a median line as well, which I would use right here. Okay, so what you see now, you can go back, always look left to get right. You go back and you see that this level is respected as resistance and as support. So this level that we have drawn here is a nice level. And this is what you want to find when you're drawing your support and resistance. You want to find areas. You want to find areas in which price has tested it as support and resistance. That way you know it's really a strong level of support or resistance. It doesn't have to always be that way. You need at least 2 points again, the same way with the vertical trend line. But just going back to see, has this level been respected multiple times? And as you can see, it has. It has been respected as support. It has been respected as resistance, support. And price has broken it, has come back, broken it again, and now it is tested as support. Okay, so you're good here. You can draw another one. You don't want to draw too many lines, and I'll tell you why. As you can see here, support, resistance, excellent line. All right, so this is your weekly markup. These are your weekly points of reactions. This is where the banks have come in, and when you reach these levels, they have reacted to it. So what you do is, even when you're trading something different other than harmonics or whatever, you always want to draw your levels of support and resistance as well. I have a quarters theory in which It's in the trading, which is what I use, where once I mark those up, I never have to mark up my support and resistance again, because price always respects those. I love supporting the Cordes theory as my support and resistance better than marking up the charts this way. But this is the institutional way of also marking up your charts as far as trend lines are concerned, i.e. support and resistance, okay? So we have the weekly charts drawn up. Now you want to drop down to your daily, and you want to do the same thing. And you want to draw from the high point. And I choose the blue. I use blue for my daily markups. Whatever trend lines or whatever I'm using, if I see blue, I know I'm dealing with a daily level. Okay? And so my daily level would be here. My daily level would be here. Okay? And my daily level would be, let's say, right there. Okay? You see that? Support, resistance, I'm good there. This is support, this is the resistance, I'm good there. Let's go back and just check. Sometimes you can't go back too far. Okay, we're good there. Resistance, resistance. Okay, we're good there. Okay. You want to have some distance between weekly and daily, so that way you can see the differences here. So let's say if price was to break this weekly level of support, we know we're coming down to a daily resistance level. Okay, so you can actually see this level of structure right over here, right in here. So this is what you're looking for. If you want to put one right here, that's resistance. That's not break here. You know, we're good to go on that in that area. Okay, so this is your daily. Let's go to your 4 hour. My 4 hour, I tend to use red. Red. This is my level, my low level. My high level, you don't have to. It's the same as my daily, so that's good. We can use this area over here. Again, we're marking up not the wicks, but where price end. And sometimes you'll see that where price ended, there are wicks that go above it, and then of course sometimes they're not. Maybe even, let's say, right over here. Let's use this line here. It's red. Right there. Let's make this nice solid line. There you go. So that's how you do your levels of support and resistance from an institutional level. If you want to get the points of rejection, this is where you would do the wicks. You can use a different color. Let's say you use black. So you'll know that when price gets there, it's at a level, it's a point of rejection, that it has once been there. It's created wick, but it was rejected. So that's the difference between your trend lines, your horizontal support and resistance at a point of reaction and a point of rejection. The point of rejection is going to be at the wicks. The point of reaction is going to be where price actually closed at. And so when you look at your charts, now you're looking at your charts from all these angles here. You see that price has come up to a 4 hour level of resistance here, has reacted to it, and is heading down to this weekly level of support. Now, of course, your higher time frame levels of support and resistance are the strongest. So you want to really watch when price comes down into this area. You know, this is a weekly level, and what it does from that point will be massive. So if it breaks this weekly levels, again, remembering price is moving from train station to train station. If it breaks this weekly level of support, it's going to retest it as resistance at some point. And once it has retested as resistance, it's heading for the next level of support, a weekly level, which is massive pips. So just remember that the higher the time frame, the more pips that you will be gathering. So when you mark up your charts from these institutional levels and you use color codes to help you understand what level you're approaching, you'll be able to understand that you have a great amount of pips involved here. So you can trade from one support level of resistance to another, support and resistance, of course. But of course, in this training, I'm teaching the harmonics. So you want to find a weekly harmonic to find out where you're going. And this is how you end up trading harmonics or trading any method in which you're using from higher time frame levels. And this is when you start catching not 20 pips a day, not 50 pips. This is when you start catching thousands of pips. Your minimum pippage, a small pippage should be 300 pips on a weekly time frame. But you're looking at between 500 pips or more, depending on the harmonic, of course, depending on where you're catching the harmonic. If you're catching it from a C to D point, you're looking at maybe 1,000, 2,000 pips sometimes, depending on the harmonic. If you're just catching it from the D point to the take profit, you're looking at maybe 300 or more pips. Again, working from a weekly or daily time frame will take a lot of patience, which means that once you get in the trade, if you're going to be waiting for your take profit to take place, you will have to hold the trade. And each candle from a weekly chart, each candle is 1 week. So you're looking at multiple weeks in the trade. But you can say to yourself, hey, I can use this as my personal savings. You put 10 cents on it. You put a standard lot on it. A standard lot at 500 pips is what? $5,000. But you put 2 lots on it, it's $10,000. So it's all how you look at it. So again, this is just a nice understanding of trend lines and how you can actually draw them up using color codes. If you're not going to use the quarters theory, it's going to help you to understand differences on what price is doing, help you to see the charts as well. And this helps you as well with structure. Let's go down to the daily here. These are areas of structure. Now, usually we do it from trend line. I mean, I usually do mine from wick to wick, highest point, and so forth. But these are just, again, different methods in which you can draw your trend lines to understand where prices we're going. Again, you're not looking for complete accuracy. These are what we call zones, which means it just really alerts you that when price hits these areas or gets next to them, for you to start paying attention to the charts to see what's going on. You always want to respond to it. You don't want to react to it. You don't want to say, oh, God, my God, price is getting here. It has come down to this level of support. So boom, I'm just going to take a buy. You want reasons to take a buy. You need confirmation. You need other type of confluences to take the buy. And sometimes that's where price action comes in at. So, okay. So price has come down, hit this level of 4-hour support. It has created a wick and has rejected it. So what's next? Price action comes in. What's your next candle? Your next candle is a bullish candle. Has come down, has showed a level of rejection as well. And it has closed quite close to this level of resistance, a weekly level of resistance. So, I'm not going to get into price action. That's a whole different course. But understanding price action, understanding these candles, what's going on in the market, you'll be able to enter the trade successfully and catch some pips. Let's see, how many pips would this have been? Let's say you were aggressive. Let's say you took a buy off of this candle right here. This is a reversal pattern, railroad tracks. And you took a buy and you took it up you wanted to take it up. You got a good 347 pips. That's 347 pips. Had a couple of days. Let's see. Let's say you took it right here. That's actually 284 pips. So you got 1, 2, 3, and 4 days. You got about 284 pips. Depending on your lot size, it could have been $2,840 if you had a standard lot. Cut that in half if you had 0.5, and go on and so on and so on. That could have been for 4 days, you would have made that for the week. It's the daily chart, so you would again wait to see what's going on in price action. But like I said, I don't want to get too much into that because it's just about trend lines, support and resistance. So I hope that you enjoyed this video, and if you have any questions, feel free to hit me up. All right. On to the next video.